Right now, there's this intense tug-of-war happening in the Ethereum market. You've got these powerful long-term holders digging in their heels on one side, but on the other, there's a mountain of risky debt just threatening to pull the whole thing down. And it's all centered on one critical number, $3,000.
And here's where we are, right this second, $2,946. So after a pretty solid recovery, ETH has slipped back below that key psychological level of $3,000, and it's just hovering in a really precarious spot. So the big question for everyone is this a solid floor, a launching pad for the next move up? Or is this a dangerous cliff edge where just one wrong step could lead to a really steep drop? For anyone in the market, the stakes really couldn't be higher.
Okay, so to really understand what's propping the price up, we've got to look at the first side of this battle. We need to talk about the powerful defensive line being formed by a key group of investors, the long-term holders.
And look, this isn't just some random price. That zone between 2,900 and 2,940, that is a historically significant battleground. Think of it as the line in the sand where buyers have repeatedly, and I mean repeatedly, stepped in to stop the price from falling any further.
So who are these buyers, right? Well, they're the long-term holders, the LTHs. And for them, the recent price dips, that wasn't a reason to panic. Oh no, that was a massive buying opportunity. They basically used the market's weakness to get a whole lot stronger.
And just how much stronger are we talking? Well, since late November, this group has piled in and accumulated a staggering 4.8 million ETH. That is a massive vote of confidence, a huge amount of capital being deployed that's basically screaming they believe the price is headed higher.
Now, this chart really puts the scale of that move into perspective. That 4.8 million ETH, that represents 4% of the entire circulating supply. And it was all scooped up in just a few weeks by this one group of investors. That's a really significant shift in who holds the keys.
And here's the kicker. Here's their motivation. These holders are now collectively sitting on about $4.8 billion in unrealized profit. You better believe that's a powerful incentive for them to defend the current price and protect those gains.
But every story has a counterforce. So let's flip the coin and look at the other side of this tug of war. We're now entering the high-risk, high-reward world of leveraged trading. And believe me, it paints a very different picture.
All right, before we dive deeper, let's just quickly break down our key metric here, the estimated leverage ratio, or ELR. In super simple terms, it just measures how much debt traders are using compared to the actual cash in the market. A high number means more risk. Simple as that.
And wow, take a look at this. The current leverage ratio has hit a 6-month high. You can see how that final bar on the right, which is where we are right now, is just towering over the 3- and 6-month averages. This means traders are borrowing heavily, making the whole system much more fragile and way more vulnerable to any shocks.
And the danger doesn't stop there. This high leverage is being combined with some other worrying signs, like weak new money coming in and a real lack of any major positive news to push the price up. All this creates a perfect storm for something called a liquidation cascade. That's where just a small price drop forces leveraged traders to sell, which causes a bigger drop, which then triggers even more selling. It can spiral out of control fast. So we have two massive opposing forces, determined holders on one side and risky leveraged traders on the other. Where does Ethereum go from here? Let's break down the two most likely short-term outcomes.
This slide lays it out pretty clearly. On the one hand, you have the bullish path. This could get triggered by some good economic news, maybe something that pushes the price past that resistance zone and opens up a run toward 3,200. But then there's the bearish path. This one could be triggered by weakening buyer momentum. If we break below that $2,900 support level, well, we could see a slide down towards 2,700. But here's the interesting twist. Despite these two really dramatic possibilities, most technical indicators are kinda neutral right now. They're actually suggesting the most probable outcome isn't a huge breakout or a scary breakdown, but a period of consolidation. It seems the two forces are so evenly matched they might just hold each other in this tight range for a while.
All right, so as we wrap this up, what we're left with is this incredibly fine balance, a real stalemate between two powerful market dynamics. Let's do one final side-by-side comparison to really nail it down.
Here it is, the whole story in one table. On the left, you've got the force for stability, those long-term holders with billions at stake defending that strong support at $2,900. And on the right, you have the force for volatility, the highest market leverage we've seen in 6 months, and that ever-present risk of a sudden cascading sell-off.
And that leaves us with the final question, doesn't it? You have a wall of incredibly committed buyers facing off against a mountain of fragile, high-risk debt. Something has to give. The real question is, which side will blink first and decide the next major move for Ethereum?